Good afternoon and welcome to Midcap Radar. I'm Vivek Iyer and with me today is Hormaz Fatakia. Good afternoon, Hormaz. It's a red-looking screen. We've given up most of the gains. Nifty Bank amongst the top sectoral laggards, given the fact that HDFC Bank has squeezed quite a bit of a sell-off, especially after the bit of a disappointment it saw as far as the MSCI weight increase is concerned. Overall, markets are seeing quite a bit of a sell-off, and it's been a muted start as far as this particular session is concerned. What's on your radar, Hormaz?
HDFC Bank is the culprit, isn't it? But we'll start off with the headlines that we have on the radar today. Dalal Street is under pressure currently with key indices trading near the lowest point of the day, led by financials. Mid-caps are in the red, but relatively outperform.
Aarti Industries slides in trade after the management says they will revisit their EBITDA guidance due to volatility in margin and pressure from China. Brokerage firms MK and Nuvama are bullish on the stock. Kotak retains its still, while Morgan Stanley remains equal weight on the stock.
Inox Wind zooms yet again after the company has bagged a 51 megawatt equipment supply order from Everrenew. The stock is up over 6%.
It's a strong listing for Brainbees Solution and Unicommerce at Dalal Street. First Christ parent company lists at 651 rupees versus the issue price of 465 rupees a share. On the other hand, Unicommerce lists at 235 rupees versus the issue price of just 108 rupees a share. Well, it's a red screen, especially in the last 1 hour. We've seen the sell-off accelerate. A lot of important results is something that the street is awaiting at this point of time. Hero MotoCorp is one stock, from the Nifty that will declare its results shortly. The other stock on the radar, of course, is Apollo Hospitals. That stock too and that company too will declare its results. And watch out for Hindalco as well. Hindalco too generally reports its results during market hours itself. So a couple of stocks, especially from the Nifty, that will be reporting its results and be important to track them. Hormaz, what are you looking at?
Interestingly, the index is continuing to face pressure around that 24,250 mark. And barring pharma and IT, most of the other sectoral indices too are continuing to trade in the red. Nifty Bank, of course, being the culprit, the bigger one because of HDFC Bank. But the metals index is also seeing a bit of a sell-off in today's session. But in our segment, Midcap Movers, Vamakshi is here to take us through some of the other names that are buzzing around in the broader market space. Vamakshi, good afternoon.
Well, good afternoon, Hormaz. Yes, it's red across the screen, but the mid-cap index is performing relatively better. Let's look at the top gainers in today's trading session. The Triveni Turbine is seeing an uptick of almost 14.6%. Electra Greentech reacting to a good set of numbers. The stock is up nearly 8%. Keynes Tech, Inox Wind, an order win coming in for the company, and as a result, Inox Wind is surging by almost 8%, and Fortis Healthcare too is seeing gains of around 4%. Top losers in today's trading session, of course, includes Aarti Industries. Weak commentary coming in from the management, and resultantly the stock has declined by almost 15% in the trading session today. DOMS, despite a good set of numbers, has tanked in the trading session today, down nearly 6%. We also have Cochin Shipyard, Chambal Fort and Deepak Nitrite down and out in trade, somewhere around 4 to 5%. But there are a couple of stocks that are gaining, and gaining on the back of good momentum as far as volumes are concerned. Ratan India Enterprises is up nearly 6%. Blue Star 2, consumer durable name, up nearly 4.5%. But Sun TV, there are strong volumes coming out there, and it's declining for the second straight session. Remember, the stock declined after reporting a weak set of numbers in the trading session yesterday, and it continues to decline today. AI Engineering too, down nearly 5%. Apart from that, it is the consumer durable index which is actually gaining momentum in such a weak market. Blue Star, 4.5%. V-Card Industries also up nearly 3.5%, and Dixon Tech up nearly 3%. So overall, the consumer durables gaining momentum.
Well, actually, thanks a lot for that. Keep an eye out on Sun TV in particular. Remember, the stock is in the F&O band today, so we'll keep an eye out on that as well. But moving on to an exclusive story, sources are telling CNBC-TV18 that Bajaj Auto is likely to increase the capacity for its CNG motorcycles. Parikshit is joining in with more details. Parikshit, tell us more.
Well, yes, this is a company that Bajaj Auto has been betting on in a big way. They have received 60,000 inquiries for the Freedom 125 CNG motorcycle since the launch on the 16th of July. That is since less than 1 month. Now, at the moment, we hear that the company has a plan to increase capacity for the CNG motorcycle to 20,000 per month by the September-October period. And by the end of August, they would like to hit a capacity of 10,000 per month because they are receiving good response. For the moment, they're sitting on an order book of 13,000 motorcycles. 1,600 have already been delivered since the launch, and 5,000 CNG motorcycles will be delivered this month. So all in all, the company believes that this is a motorcycle, a segment that they are going to gain in. The company is already selling these motorcycles across Delhi, Karnataka, Kerala, Maharashtra and Gujarat, and 86 towns in these cities. There is also a plan to expand the sales footprint of the Freedom 125 CNG motorcycle to pan-India within the next few weeks.
Thank you so much for that, Parikshit. A very interesting story, and capacity expansion as far as the CNG motorcycle is concerned. It'll be interesting to see the kind of rub-off effect this particular development also has on CNG stocks like MGL as well as IGL. But let's now slip into a short break. Up next, we'll be joined by the management of Eflex to discuss the Q1 numbers and outlook going forward. Welcome back to Midcap Radar. Let's now immediately move to the first corporate on the show. We have Eflex management. The company saw a sharp expansion of over 250 basis points in their margin on a year-on-year basis, while net losses narrowed. Management says that they will end FY25 with volume growth in the range of 6 to 7%. Rajesh Bhatia, the CFO and Group President of Finance and Accounts, joins us now. Good afternoon, Mr. Bhatia. Thank you so much for joining us now. First up, let's start off with the volume growth guidance itself. 6 to 7% is what you have indicated to the street. Give us a sense of where is it that you're seeing demand coming from, and also give us a sense of how is it that BOPP as well as BOPET spreads have actually performed in the quarter gone by.
So I'll first tackle the BOPP and BOPET spread. So as we've seen from 1st of April till end of July, we've seen about a 30% increase in the BOPET prices and about 18.5% increase in the BOPP prices. Of course, this hasn't happened in one go. It has happened gradually. But when I compare the position from 1st of April to end of July, that's what the position is. There have been a raw material increases also in the range of 5 to 8% for the two categories. But generally, I've seen that the margins have improved and the volumes have also improved, as you would have seen from the financials. Overall guidance, last time what I had given for the top line for the year as a whole was about 15%. Happy to say that first quarter we are up by 12.3% on a year-on-year basis. So that 15% looks quite feasible. And we have seen, the bestest ever quarter for our aseptic packaging business, which has seen about 6.8% Q-on-Q growth, and even on a YOY basis, because you compare here a season to season, we've seen a plus 3% growth. And end of the year, when we'll up and running the larger capacity of 12 billion packs, so the next year looks to be extremely promising for this. On the overall guidance for the packaging, on the sales volume, I think the sales volume from aseptic packaging from our new division, which is PET chips, happy to state that even PET chips has achieved in the first quarter itself, Panipat plant has achieved a 65% capacity utilization, of which about 30% is bottle grade chips, which opens up new vistas for the Eflex. It's a new product category that we have created. So we're not only making the chips for the packaging films, but we are also making for the PET bottles as such.
Mr. Bhatia, good afternoon. Thank you so much for joining in. Now, I wanted to ask you about how have margins for your packaging films business moved this quarter, and if you can couple that up with how much with the volume growth that you mentioned for the 6 to 7% for FY25. Can you break that up in terms of the aseptic packaging as well as for the packaging films business?
I think packaging films, the volumes in the aseptic packaging category are about 3% higher on a year-on-year basis. For the packaging films, the numbers in India are up by about 5% on a YOY basis. So that's healthy. So a mix of these two plus the new businesses streams like, the CPP films which got commissioned in Russia, plus, the likely commissioning of the Mexico, the films plant. I think we will have overall about 6 to 7% volume growth so about 4% coming from the packaging films and the rest coming from the aseptic packaging.
Okay, Mr. Bhatia, see, we're looking at the guidance once again. So, number one, you've reiterated the 15% top-line growth guidance. Now, this is going to come on the back of a 6 to 7% volume growth, indicating that there is going to be price improvement. You already have indicated that Q1 did see some price improvement. Going forward also, number one, you've said that you will stick to the top line. What is the EBITDA, core EBITDA growth guidance that you're giving? What kind of margins can we expect for FY25? And what is the corresponding PAT or corresponding bottom line growth that we can see over FY24?
I think what we can expect for the year with a 15% top line growth, EBITDA anywhere in the range of 2,000 crores plus. It could be, if the prices keep on supportive, remain supportive, it could be between 2,000 to 2,200 anywhere. Also depends on the timing of the new project commissioning and all that. So if we get in the Q4 the gain of the aseptic as well as the plant in Egypt, I think we could be up for a pleasant up surprise. Which I think would be is what we feel that could be possible. So between 2,000 to 2,200 crore will be the EBITDA for this year.
Right. Very quickly, Mr. Bhatia, one final question due to paucity of time. Your current net debt is around 56-67 crores at the end of the quarter. Do you see that as your peak debt? What do you see? Is that your peak debt? And do you see that number tapering down? What do you expect to end the year with?
I think we can look at the peak debt of about 6,000 odd crores. Not much different from here, given that some of the projects are yet to commission in the current year. So take the peak debt as 6,000 crores for FY25 end.
All right, Mr. Bhatia, we'll leave it at that. Thanks so much for joining in and sharing with us your thoughts on the road ahead for the company. That was the management of Eflex. The stock not doing very well in today's session, down around 7.5%. Time for a short break here on Midcap Radar. When we return, we'll be joined by the management of Hightech Pipes to discuss their quarter gone by and the outlook ahead. Stay tuned. Back on the other side. Back with us here on Midcap Radar. On to our next corporate conversation then. Hightech Pipes reported a good quarter first numbers. The EBITDA was a beat on estimates. The margins also saw an expansion, while they also reported their highest ever quarterly sales volumes. To discuss further on their quarterly performance, Anish Bansal, who's the CEO of the company, is joining us on the show. Anish, good afternoon. Thank you so much for joining in. Congratulations on a very strong quarter. I'd like to start off by asking you about your volume targets for FY25. You had ended FY24 at around 391 kilotons. What's the number that you have set for this year, and also how much of that would be exports?
Good afternoon, Almaz. Thanks for this call. So we did a volume of 122,000 in Q1, and we are hopeful of achieving 500,000 ton for this financial year, coupled with a good domestic demand and a lot of capex that is poised to come in H1, and also because of the new established facility in Gujarat that we have recently commissioned. That plant, we are seeing good order flows in that plant, and we have entered new segments which earlier were not there. So we are quite bullish on the demand side, and the production side, we are geared up to meet this demand for the whole financial year.
How much of the 500,000 ton would be exports? Anish, you had mentioned in your previous interactions with us that it would be around 10 to 15%. Do you stick to that number, or it can be higher as well?
So right now, we are seeing good demand from the domestic side. So our current focus is to meet the domestic demand, and exports, yes, we'll be maintaining our 10% target for this financial year.
Anish, Vivek this side from the research team as well. Your EBITDA per ton currently is at 3,500 rupees per ton. When we compare it to your peers, who are larger in size, they have EBITDA per ton that actually starts from 4,000 rupees a ton onwards. And the story is the same even when it comes to the value-added products as well. So what plans do you have in order to go ahead and expand the EBITDA per ton that you currently enjoy on your products?
So Vivek, in our current portfolio, the share of VAPs is around 36%, and the newly added facilities, they are more towards the value-added side. So I think going forward, our target is to increase this 36% VAPs to almost 50%, which will eventually take our blended EBITDA per ton from 3,500 rupees to 4,000 and upwards, maybe.
When we compare it to your peers, even in the VAP segment, we generally see that they enjoy EBITDA per tons in the range of 6 to 12,000. And also, could you give a timeline as to when exactly do you see this particular mix going more in favor of VAP compared to how it is currently put out as?
So, Vivek, the newly added, facilities in Gujarat and in our UP plant, so they are mostly focused towards value-added products. And we are hoping, by next 2 to 3 years, we'll have the total mix of value-added products will be upwards of 50%. In that case, our EBITDA per ton on a blended level, it should be between 4,000 to 5,000 rupees per ton. That will, lead to higher profitability margins.
Anish, you spoke of the recently commissioned units for your company. How much has that taken the total capacity to? Point one. And point two is there a plan to add more capacity as the year goes by? And more importantly, is there a plan to add more capacity through the inorganic growth plans?
Yeah, so almost currently we stand at 7.5 lakh tons, and we have 2 more new facilities that are coming up in this current financial year. So by the end of this financial year, the total combined capacity will be almost 1 million tons. And going forward, we are seeing the industry size becoming 2x or 2.5x in coming 6 to 7 years. So we'll be on the capacity expansion spree once this capacity addition is done for this current financial year.
But are you looking at any inorganic growth plans as of now, Anish?
So currently, nothing on the table right now, but we are actively looking towards, we are looking for some good opportunities in the industry. But right now, there's nothing much on the table. But our greenfield expansion, I think that is more that we are focusing towards on.
Any targets you're looking at internally? What would be the possible capacity, and what would be that you're willing to spend to acquire any capacity via the inorganic route?
So our vision is to take the installed capacity to about 2 million tons in coming 3 to 4 years, and we are open to any any acquisition, any brownfield facility that may come up. So we are open towards it, and the exact amount and all, it will all depend on the size and the capacity that particular project that may have.
So
Anish, just another question. As far as the inputs are concerned, what kind of steel do you use? Do you use secondary steel, mainly the scrap steel, or are you actually looking at primary steel? Because when you're looking or tracking the prices of HRC steel, it's actually come down quite drastically. Now, in this falling raw material price scenario, how will you protect your margins?
So Vivek, we work in the primary steel segment, and we buy steel from all the primary mills, which are the topmost mills of the country. And you're right. Steel prices have softened a bit, but from the long-term perspective, I think lower prices that lead to higher volumes that we have seen historically. So once the steel prices are stable and they are on the they have softened. So I see a good demand coming from the shift from the unorganized space to the organized space. So I think that will entail very good for the company going forward.
Anish, due to paucity of time, I'm combining two questions into one. First up is at 1 million tons an annum, which you have mentioned as your future capacity. What will your balance sheet look like in terms of debt? And also, when it comes to your return ratios, your ROE and ROCE, they're at 8.9 and 10% respectively. How much do you see them improving by the end of the year?
So almost we are nearly, at our peak debt levels, and the most of the expansions that were in place, they are coming on stream. So going forward, I think the total debt will come down surely.
Okay.
Is there a number that you have in mind, Anish?
So currently, as on FY24, our total debt profile was around 350 crores. I think it will come down, and hopefully in 2 to 3 years, the company should be net debt free.
And lastly, on the return ratios as well, do you see that number improving by the end of the year from 10% and more?
Yes, definitely. We'll see a significant improvement this year. Significant improvement.
Okay, we're really running out of time. We have a lot of questions, but not enough time today. We'll get you on the show once again to get it, even more details from you. But that was the management, speaking to us and telling us about how Q1 was and how do they expect FY25 to pan out. But that's all the time we have on this edition of Midcap Radar Mutual Fund Corner when we return.